Hello everybody and welcome back to episode 13 of my investment journey. I think I keep this episode a little bit shorter. What I want to do is, as always, make my trade, and then afterwards we talk a little bit about what happened in the markets. So let's go ahead and invest in the MSCI emerging markets here. And we have the 1,000 euros and a little bit more ready. Let's review the order. Seems good. Buy now, order placed. Good. So let's see whether that worked. And boom, there we go. It did work. So we're up to 13,750 euros. That's amazing. So I'm pretty happy. And over the week, the portfolio was up even more. At the peak, we almost scratched at a 1,000 euro profit, at least on paper. Since then, the market has gone down a little bit, but hey, in the grand scheme of things, I'm super happy with how it all turned out. So we're up about 6%. So really, I cannot complain. All right, so that's that. And now let's check out what happened in the markets. So what you can see here is a mixed week, not too much movement up or down. Of course, a little bit of variation across the countries, but both the MSCI World and the MSCI Emerging Markets seem to have gained a little bit. Over the year, both of them are up. The MSCI World by 1.6% and the MSCI Emerging Markets by 5.17%. So that's amazing. And it's only just the end of January, and I'm particularly happy about it because I'm, of course, investing in this. Of course, we can't expect this to continue, but it's nice nonetheless. Now, I don't want to go through all the countries here, but I want to pick up on one or two stories that were quite interesting, and it might be interesting to you as well. So, the main thing that happened this week was that Trump nominated a new Fed governor, and he nominated Kevin Warsh. That's this guy. So let's read what they say here. US stocks slid on Friday as President Trump said he would nominate Kevin Warsh to lead the Federal Reserve, against the background of a rising dollar and a screeching halt to 2026's roaring metals rally. Now let's unpack this. So Kevin Warsh seems to have a hawkish record. What does that mean? Well, hawkish means that he's against interest rate cuts. He wants to curb inflation. He wants to keep debt under control. And he has no problem if the stock markets suffer a little bit. This is in contrast to a dovish economist who would like to cut interest rates, who doesn't care so much about inflation, who wants to boost the economy and so on. Okay? So that's his record. But recently, he seems to have voiced support for the cuts of interest rates, something that Trump has aggressively campaigned for, which the old Fed chief was against, Jerome Powell, and that's one of the reasons probably why he was fired. But Kevin Warsh seems to have supported the cuts. Now, what did the market think about that? Overall, I think the market ignored his recent statements, but instead relied on his reputation, which was hawkish. And I think all of the macro data and the stock market data and the commodity data that comes out seems to support this. What happened was that the dollar rose. Now, the dollar rises if I keep the interest rate high. At the same time, this can hurt stock valuations. If the interest rate is high, then there's less money to go around. People and corporations are borrowing less, which they now can't pump into the stock market. At the same time, investing in a savings account or a treasury bond becomes more attractive vis-a-vis the stock market. So all of that is bad for the stock market, and that explains why the S&P 500 is down. And also, gold and silver plunged. So gold fell below the $5,000 level, while silver sank as much as 25%, its biggest daily drop on record. And that's pretty interesting, and I think that this is really an unwinding of a macro narrative. So metals have been going up because of rate cuts, because of a weak dollar, because of inflation, and just generally geopolitical disorder. And Warsh's nomination threatens all four of those. So we might not see rate cuts anymore. We might not see the dollar weakness. In fact, we see strength now. There might be less inflation now. And yeah, maybe it also calms geopolitical disorder. And so that's the reason for the gold and silver plunge. And one country that has been hit really hard by this is Canada. And Canada, in fact, across all the countries that we're looking at, is the biggest loser of the week. Now, what happened here is Toronto Stock Exchange plunges due to massive precious metals sell-off. So yeah, it's mainly a sell-off in precious metals. And you have to understand that in Canada, metals and mining is a huge business. So you can see here, I mean, you can research this for yourself, but Canada is the 5th largest producer of gold, then potash, big time, number 1, coal, iron ore, uranium, and various others. So it seems to also account for like 21% of Canada's exports. So metals and mining, very big business. And so since now the metals have been hit, the Canadian Stock Exchange suffers tremendously. A small story on the side here was that Trump also wants to impose a 50% tariff on Canadian aircraft importers. So there was an argument there with the jets from Bombardier. And yeah, that also hasn't helped Toronto. Yeah, what else happened? I think the only other country here with a notable movement in the developed world was Germany. Now, Germany was dragged down by SAP. SAP is a software company and maybe the only tech company that Germany has in the sense of digital technology. Germany, of course, has many old school tech companies, engineering companies and so on, but SAP is kind of like their tech company. And SAP didn't deliver here, so they apparently didn't achieve their goal when it comes to AI revenues or something like that. And so they lost 11% in one morning. And now, in fact, the most valuable company in Germany is again Siemens, the old school dinosaur industrial company. Now, the rest of Europe was kind of a mixed bag here. I think no major storylines. The only other thing that happened here that I can see that was noteworthy was South Korea showed a big movement. And all I could find here was that investors seem to chase AI shares again. So AI is the story here. Despite concerns over a bubble, they invest in tech shares. So in South Korea, apparently no one cares about the AI bubble. They seem to believe that companies can and will make a profit from AI, and they keep investing in it. All right, I think that's it for the week. I think those are the main storylines. I'll keep following the markets so you don't have to. Of course, as always, I will make my weekly trade. Hope to see you next time. And until then, all the best.